Turning our attention to interest rates, what are the most common loans that you see buyers using, and what loans would you recommend right now? Joining the show is Steve Kazel. What are you seeing out there? What are the options available?
Well, back when I bought my first home, it was an 80-15-5 that was the most creative, and I utilized that where the seller carries 5%, the bank gives you 80, and you come up with 20. Or you come up with 15. And this day and era, that's not going to work. That's just not going to cut it. So what I'm seeing in the most of the loans that we're seeing go out today are people trying to get their 30-year fix down to a 15-year loan and have the same payment. That's very creative, kind of a no-brainer there with the interest rates the way they are. Second to that, a lot of people getting more creative. They're taking some of their life savings and figuring out a way to buy a house with that, borrow it from themselves, and then pay themselves back either through interest throughout the years or just straight away refi it. In a few months, they can refi their home after they own it a lot of times, and on 70-30, get their 70% back in the bank or back in their investments, or just simply keep paying themselves interest over the years. So those are the two most creative things I've seen happen right now. Of course, the 80-20 loan mix is also very attractive with those interest rates low.
Yeah, I know most people assume that they're going to keep these loans for 30 years and they go ahead and fix it for 30 years, but the fact is that most people refinance out of their loan every 3 to 5 years. Sharon, you have some insight on this. I want to get your 2 cents. What do you see throughout your career? Do people hang on to these loans?
Absolutely not. It's amazing that the buyers today, and even over the last 20 years, what I have seen is that they use whatever loan structure that gets them into the property today. So whatever works based on your current financial situation, whether you have the down payment or you don't have the down payment, or if you have to do some gift funds or whatever needs to happen to get the home that you want today, then 6 months even sometimes, or 12 months or 2 years, they're refinancing and getting a better loan, getting rid of the PMI insurance and getting a lower payment. I've seen first-time home buyers over a 5-year period of time actually do this 3 times. The third time was interesting because they actually put their sweat equity into the property, raised the value so it appraises for a higher amount, and they're able to get rid of the PMI that way by having the 20% in equity because of the work that they did on the property. So no, people are not keeping the loans long-term. Now with these low interest rates, I think the mindset is changing, that they're actually thinking, well, if this rate is never going to be here again, I want to be able to hold on to it. So they're coming up with ways to secure 20% down so they can put together a package that they can see using long term.
Yeah, it's interesting. We've seen interest rates in the 4s and we predicted that they would go under 4. Now they're in the 3s. That seems to be the norm. The question is, will they ever make it to the 2s? This has been an incredible refinance boom. People have incentive to keep refinancing because the rates are lower. At some point in time, those rates will go higher. Robert, I know you're a student of the markets. You follow interest rates closely and the lenders that offer the best rates. What are you seeing as far as options, the mortgage options today for buyers and investors?
Well, Andrew, it's a moving target for sure. Banks are coming and going on different programs, and many are offering niche programs depending on the type of property you're purchasing. We just closed one, an investment property, and it was a niche product in that the buyers needed to use revenue from another Airbnb they operate to purchase a second Airbnb, and the only lender that offered this ended up changing up what they would accept in the middle of the loan. So we had to scramble to make that work. But yeah, there's a lot of options out there, especially in the niche products. I have some go-to people that, depending on where they're going, if it's a jumbo purchase, then I might introduce them to a couple of different programs in that arena. Or if it's a government program, it's pretty much the same across the board. So really, it's very specific to the buyer and their needs.